Good morning, everyone. So, thank you so much for joining us today. Today, the goal is to provide you with insights about the real estate market. We're very excited to be here with you today. So, first of all, we're going to get started with what's going on the U.S. economics. As you know, there has been a lot of talk about the impact of COVID in the economy, in pricing, in the level of activity. And as you can see in this chart, it's very easy to see that the impact of the COVID and the economy shutdown in the second and third quarter of last year was extremely significant, with a drop of about 32% on the GDP on a quarter per quarter basis. As most of the economists expected, that was a very short-lived recession. It only lasted 2 quarters with a V shape, where the recovery has been taking it has been somehow faster than what was expected. In a survey performed by the Fortune 500 CEOs, everyone expected that the level of the GDP would have reached the same levels of December of 2018 in January 2022. We're seeing this has not been the case. And even though we still have 8 million jobs to be recovered, we're seeing the recovery has been substantial, and we expect this to continue to do so. We're seeing that China will be leading the expansion of the world economy with about 8.4% of the GDP growth expecting for 2021. But second has been the US with the most important expansion in about 40 years with 6.2. Then some European countries will jump in, and then the rest of the world. But all in all, this world economy, what has led is to a recovery on the pricing level that, as we know, there has been a lot of talks about the impact of inflation rate and what does it mean for the interest rate, the bond market, and of course, the US mortgage market. Today, we're going to have a release of the new inflation rate for May. It is expected to be 4.8 to 5%, and that will be the most significant inflation spike since 2008. So the main question is inflation, the economic term, is a generalized increase in pricing. What is happening right now, due to the impact of the COVID-19, there has been a lot of disruption in the supply chain. And because of that, some people are arguing is that inflation is just a relative accommodation of pricing due to the logistical constraints in order to produce these products and how to move them in a more efficient way. We've seen the world economy is also pushing the price of commodities higher, and that would also have an impact on the inflation rate. So we still need to be determined, but the most important thing is that we expect during this year an increase in interest rates from the Fed in order to curb down inflation, to try to keep it in the 2% that has been the target that has been established by the Federal Reserve. In terms of the stock market, we've seen that this was a huge crash just when the economy was shut down, and then we've seen a huge recovery that has been taking place. But this not always has been roses. We've seen the tech industry that has been outperforming some brick and mortars and more established companies due to the changes in the consumer preference uses and service versus goods. And we feel that that is going to have a long-term effect in the economy. But the stock market has generated a lot of wealth effect in the economy that in turn has been generating spillover effect in the real estate prices, and due to the people has been acquiring real estate and other luxury goods like yachts, jewelry, antique cars, art, all the people that could not be traveled, so the spending has shifted tremendously. Some industries were total losers and some others were very, very important winners. We also see on the bottom of the chart the amount of trading volume, and we've seen that since COVID, the trading volume has increased significantly in average, and we expect that to continue to do so. Again, on the cryptocurrencies, we've seen Bitcoin and Ethereum that has had a huge spike, and that also generated a lot of new wealth and new rich individuals that they are in turn taking some of these profits and reinvesting in real estate, having a very positive income in our economy. On the commodity prices, the world economy, as you see in the chart, that we pick up three very different materials like corn, oil and gold. And we've seen that has been an upsurge in pricing in most of them, but most importantly on the oil prices after the huge decrease, we're almost reaching the levels of the post-pandemic. And that's very important for some exporting markets like that are important for us in Southeast Florida, like Mexico, Colombia, Brazil. So all this will improve the trade balance and will lead to a appreciation of the local currencies, improving the affordability ratio of real estate U.S. Real estate markets. So this chart is very interesting because what it shows is that the Miami S&P Case-Shiller index has been outperforming the 20 city composite, which is led by the top 20 cities in the United States. And the gap has been fairly steady since 2014, but we expect this gap to increase over time due to the factors that we'll be discussing today within the presentation. So moving on the general real estate side, a lot of talks has been taking place, and some snapshot of what's going on in each one of these markets. We see that Miami-Dade has only 1.91% of the total stock in the market that is being divided in single-family homes and condos. If you see single-family homes is 0.88%, while condos is 1.93%. And we see something similar trends in moving north, but each time we will moving north, the condominium market has less of a weight in each one of these markets. But we see that in all these markets, as we move more north, the inventory is even smaller. That will lead to a higher appreciation in Palm Beach County, and then Broward, and then Miami-Dade. But what is happening in Miami-Dade is that the condo market is reacting very fastly after the huge recovery in prices and after the pandemic in the single-family home market. In this chart, you can see that the single-family homes have been behaving extremely strong, especially under $1 million. We are very low in inventory. Days on the market decreasing sharply. We're only at 38 days for the $500,000 to $1 million branch bracket. And we see that 24% of the transactions are being sold above the asking price. If we go to the condominiums in Miami-Dade, only 9% of the transactions have been trading over asking, and the days on the market are at least 3 times higher than the single-family homes. But we expect this gap to continue to reduce, and we're going to start seeing a higher appreciation on the average sales price, as you can see in the center chart, that has been since September. We've seen a huge increase in the average sales price. This is all across the markets. And the important component here is to understand the influence of the U.S. domestic buyers migrating to Florida, that they're picking up properties in the $1 million to $5 million range mostly. And that is a segment that has behaved the strongest since the recovery of the post-pandemic real estate market. Palm Beach condominiums, we're seeing that is a little bit more aligned with the single-family homes, but still only 11% of the condos are trading above the asking price. But days on the market remains more steady, and the average sales price has not increased as much. In Palm Beach County is one of the strongest markets that has been having a huge immigration from the Northeast, Illinois, and California. We're seeing that 26% of the single-family homes are trading above asking. Days on the market are decreasing sharply. Now, in the lower end, we're pretty much at 33 to 42 days on the market, and the $1 to $5 million only 84. These numbers were a lot higher in the past, and we expect this to have a huge impact on pricing and potentially new development opportunities in this market. In the condo side in Palm Beach, so this is a much smaller market. Only 12% are trading above asking, but still, days on the market remains relatively healthy, but with a negative trend, which is very important for potential price appreciation moving forward. So one of the most important things that we were discussing lately is that how much is really the impact of the out-of-state buyers coming from different markets in the U.S. And our public records indicate that 14% of the transactions booked has been from buyers from out of state. This statistic can be skewed, and this number could be higher, since some people have been using Florida corporations or entities to acquire these properties. So we internally, we believe that this number is a lot higher, and that has a huge impact in our distribution channels and what are the feeder markets that we're targeting moving forward. If we pick up the top 10 markets, we've seen that New York continue to lead the pack, followed by Connecticut, New Jersey, California, Massachusetts, and Pennsylvania, North Carolina, Michigan, and Texas being an important part of the mix as well. Then the other very interesting component that where local buyers are only 39% of the transactions are on a cash basis, 71% of the outside buyers are buying cash. And that has a huge impact for the local buyers because they're being outbid by domestic buyers coming from other states. They're paying cash. So that has also been a big part of the appreciation of some of these properties recently. And this is very interesting. We're seeing that the trend about the domestic and the local buyers has been pretty much fairly steady, but it's totally reversed. While in Florida, buyers, about 60% are paying, are using debt to acquire their properties. The out-of-state buyers is about 70% they're using cash. So it's a very different demographic that, of course, that's something interesting for all the agents in this presentation. The other interesting thing is that how different it is when we analyze units sold, volume sold, and average per square foot. Because, for instance, we see in market like Pennsylvania or Michigan or Georgia, and we're seeing that the price per square foot where they're acquiring are even higher than New Jersey or even in New York, which is something that no one could have predicted. The same thing with the volume, even though New York continues to be #1 in volume and average sold. We see, for instance, Connecticut, that has a huge impact on the volume and not so much in units sold. So that gives us a very strong insight of what type of demographics we're targeting for each one of these individual markets. Finally, what markets are hot? We see that Miami Beach, Miami, Fort Lauderdale, and Boca continue to lead the pack, followed by Coral Gables, Palm Beach, Del Rey, and then Palm Beach, Jupiter, and Key Biscayne. But if we analyze the price per square foot, we're seeing that Miami Beach, Palm Beach, and Key Biscayne are leading the pack. Well, from the volume perspective, we're seeing Miami Beach and Palm Beach being some of the most strongest market with Boca and Fort Lauderdale. So it's very interesting how to determine how this capital is moving around and what type of property they're looking for. On the new debt market, we're seeing that, again, the size of the market in Miami-Dade is much higher than Broward, and Broward is much higher than Palm Beach. There's each time as we move north, we're seeing less vertical construction, and we're seeing that very interestingly, that the percentage unsold, that is the white part of the pie charts, we're seeing that Miami-Dade is only 13%, Broward 11%, but Palm Beach is 40%, and that would generate a big question why Palm Beach, that is performing so well on the resale market, is in a way has so much inventory on the new debt side. And the reality is that Palm Beach started a lot later in the cycle, in the previous cycle, because Miami started the cycle of new development, especially fueling their sales with international buyers. And this trend starts shifting in the mid 2015 when the commodity price started going south, and the local currencies in the most of the Latin markets started like eroding their purchasing power. So, and then all the markets are shifting to the U.S. market, and Palm Beach was a big winner in terms of attracting U.S. domestic buyers. So that's why this that might seem that Palm Beach is not performing is all the way around. Palm Beach is performing extremely strongly. And the other thing that is important in this chart, when I analyze the bottom chart, is to see that the average sales, the average size of the project as we go north is smaller and smaller. And that is because as we move north, the demographic is more like a second home or third, fourth home, and it's not so much investment driven. So we've seen in Miami, the average size of a unit and the number of units in the buildings is much higher than Broward, and Broward is higher than Palm Beach. So the more we move north, we're seeing a more stable and more domestic-driven market. This chart also illustrates how the total inventory, how it is allocated on a per geographical basis and even on a per neighbor basis in Miami-Dade, Broward, and Palm Beach. The color help us to pretty much determine where we are, but again, we're seeing that most of the markets in Miami-Dade has been mostly sold out. And if we come back to this chart, we see that the overall inventory that we have in the market for new debt from 2011 to 2021 is pretty much 2,900 units in Miami-Dade, only 369 in Broward, and 846 units in Palm Beach. So honestly, it's a very small number of units. If in a big scheme of things, we're talking less than 5,000 units available in new development, which is usually less than 1 year of sales. On the completion profile, this is for the 3-county area. On the blue charts, we're seeing all the projects being completed, and we're seeing a huge peak in 2018, and that has a huge impact on the sales performance of most of the projects 2019 and 20. And then we start seeing a huge recovery in towards the end of 2020 and 2021, which all our companies have been performing extremely well. Dark gray are the projects that are under construction, expecting to hit the market, and the one in light gray is the pre-construction projects and they're going to hit the market. So all in all, we're expecting 2021 to be an inflection point where new developments are going to be popping up all around the 3-county area in order to cope with the decrease in inventory in the general real estate market and the decrease of inventory in the new development market. So that's what we're expecting, such a strong appreciation of prices in the next 3 years. And we expect Florida to continue to be a winner for all the information we'll be providing later on. The most important thing to understand is that the supply, in a way, it is very inelastic in the short term. If tomorrow 2 million people decide to move to Florida, in order to cope with that growth, the supply will take a long time to accommodate because of the construction time. For instance, 1,000 Museums, one of our most important buildings, it took pretty much 5 years from beginning to end. So if we get back to this chart and we start launching project 2021, that put us in 2026. So we're going to see a draw of inventory from 2022 to 25. And that's going to lead to huge capital appreciation. And we're going to see the gap of the real estate prices in Miami to narrow in comparison with other markets in the United States and international markets. Finally, our real estate market here locally is very peculiar. While in most countries or cities, the people are competing via pricing, in here we're competing via quality. And in order to do and to attract the most discerning buyers of the world, developer has chosen to work with the most important architects in the world that we call Start Architects, and we have the most amazing portfolio of Start Architects in South Florida that I believe that South Florida will become a museum of architecture for the 21st century. On the same note, Florida has become the most important market for branded residences. And this is due because of our demographic. Since we appeal to a lot of international buyers, the brand recognition has a huge appeal in order to attract buyers that they're looking into acquiring properties in our market. At the very beginning, the branded component started with the hospitality brands that we all know, the Ritz-Carlton, the Four Seasons, and Regent, etc. And then it moved into fashion and more recently into car makers. And we believe this trend will continue to take place, and we're going to see more and more branded component residents coming to market in the upcoming 2 to 3 years. So the key takeaway points is that we have a very strong real estate fundamentals with the underlying recovery of the economy, a wealth effect coming from the commodity prices that will have an impact on foreign buyers, on the stock markets, and cryptocurrencies mostly for the local buyers. The low interest rate continue to fuel retrades and inflation, and there is a risk. The real estate allows them to hedge against an inflation spike, and that's why investors are changing a little bit their asset allocation and improving their real estate component. From the Florida fundamentals, as we're going to be analyzing shortly, we are living a huge demographic growth. We're living a very favorable tax environment with an accelerated immigration, with a lot of corporate relocation, and the reopening of the international market will help us to bring new buyers into the equation. At the same time, we're shrinking the land scarcity. So we're extremely optimistic for the future of the real estate in South Florida, and we would like now to go and to understand more about what's going on in our market. So what are the main pillars of real estate appreciation? We need to have demographic growth in order to be able to have an appreciation in real estate prices. We need to improve the relocation of company, employment, and salary growth that will have a bigger impact in the luxury market. The tourism growth is critical for South Florida because of the fact that that is like a window dressing that expose our properties to all these people coming to Florida that eventually they will become buyers for second home properties and or investing to obtain an income in US dollars. The affordable financing has fueled tremendously the local market, but also some foreign nationals. The land scarcity is starting to become more evident in Miami, and we are in a very stable political, legal, tax, and currency stability is important for foreign nationals that are flying to quality. So let's go to demographic growth. If you see, we're expecting that we're going to be gaining pretty much $4.5 million in the next couple of decades, and we are leaving about 902 people migrating to Florida per day. This is unprecedented, and the combination of the factors we're going to describe before, we don't believe that this trend will change anytime soon. From all this immigration, 55% are coming to the Tri-County area and 45% to the rest of the state. So what we're seeing in Southeast Florida, it also is evident on the West Coast and even in Central Atlantic coast. We're seeing all the markets trading extremely well. And one of the main stories has been featured in the news has been the migration from the Northeast, and as more recently from Illinois, and even more recently from California. And we've seen that even in New York, Connecticut, New Jersey, Illinois, and Massachusetts, Florida has been the top destination since 2018. And we expect that to continue to do so. One of the main drivers of this immigration, it is the favorable tax environment. If you see the chart on our left side, we see that in the United States, we have three levels of taxation. One is the federal taxes, then we have the state taxes, and then the city taxes. For instance, if you're a resident of New York, as of recent, after the tax increase, we're going to see that you'll be able to save pretty much almost 14-15% on your revenues, because you don't need to pay state taxes and city taxes in Florida. And that's a big part why these people are coming over here to claim residency. And remember that we have 65 million people in the United States that are called the baby boomers. They're choosing where to retire and why they're going to be retiring in locations where the taxes are eroding their disposable income, while they can, and at the same time, enjoy a better quality of life. The other component that is extremely critical is the cost of living. Even that the prices has been increasing in the last 5 years. Miami used to be pretty much 110 in the US index. Now we're reaching almost 119. That means that Palm Beach, Broward, and Miami-Dade has become more affordable than other places in the country, like Washington, D.C., Boston, L.A., San Francisco, and New York being the most expensive place to live in the country. So that, of course, if we combine like lower taxes and lower cost of living, what does it tell you? You have a lot more disposable income to do things that you enjoy. And that's in combination with the quality of life that we are providing is a key drivers for all the baby boomers and people that are relocating to Florida. The other thing that we don't talk about much is about the importance of the health system in South Florida, giving support to all the people, especially on they're retiring, they're getting to an age that the health services are important. And we have one of the best offerings in order to attract this demographic. The other thing that we don't talk enough is about our air quality in our market. If we see these charts, we're just trending behind Seattle and Vancouver, but we are trading amazingly well in comparison with Santiago de Chile, Mexico, Lima, and of course China. And this data was picked up June 6th. I remember one day I was in Shanghai and the quality of index was 580. So this was a good day in the bond markets. So this is another driver, especially after COVID, where the people became more conscious about their lifestyle and their wellness, that we believe is going to be a main driver, especially when the frontiers or the direct flights will open with Asian buyers. The second important pillar for real estate appreciation is that we need to have like a growth in the economy that should be sustainable, and for that you need like job creation, and you need company relocation, and you need to have a good backbone in infrastructure to support that growth. If Florida would have been a country, it would be the 18th largest economy in the world and the fourth most important state in the country. The unemployment right now is at 4.8. Miami is trading back at 8.2, especially because of the high component of jobs in the hospitality industry and food and beverage. And we believe that will start shrinking in the next 6 months. And we hope that by the end of this year, especially when the vaccination program will be more in effect and the travel restriction will be lifted, that this number would reduce drastically, leading to potential salary increases in our area. Florida has been pretty much considered number one startup activity in the United States, the second best financial district to do business, and also the second largest international financial district in the United States. We have been ranked in the top 5 most competitive metro area, and over 1,200 companies have been dedicated their headquarters to LATAM or the Caribbean, or even from the US, from companies coming from Latin America or European companies coming to the United States. They are being based in South Florida. To become the second most important financial market in the US, we don't take this for granted. We're seeing a huge influx of national banks, but more important, international banks that are pretty much setting their base here, generating a huge relocation and expat market that affords the affordability of condominiums and the rents that these people are looking for, far exceeding the average of the state. But all this is possible because of the infrastructure that was being built in the last 15 to 20 years. All our airports have huge, in a way, capital expenditure in terms of expansion for the cargo component and the passengers. The port of Miami, for instance, has like almost $2 billion investment to improve the capability of cargo. The railroad has a huge investment as well. But more importantly today, we feel that it's telecommunications. If we analyze in the next slide, all the industries are moving faster or growing employment faster. The internet speed is a very critical component of their business. And Miami is ranking top 5 in terms of internet speed in the world. So we feel that that has a huge impact in, of course, in the banking industry, hedge funds, and of course, tech companies. Then the expansion of the highways and roads has been unparalleled, and the energy has become a very important component of course, of our infrastructure mix. This is what I was just mentioning. Technology, the growth has been tremendous in terms of number of employments, and this number is underrated because in the last 6 months we have huge announcement of companies relocating to Miami. So we expect this to continue to grow. The same thing with the health industry and banking, where we believe that the average salaries are going to be far higher than the average we had. These are some of the companies that moved to Florida recently. In the financial world, we have Virtu, we have Elliott Asset Management, Carl Icahn, Blackstone with the technology division, Citadel, Goldman Sachs, Third Point, and FTX, that is the cryptocurrency exchange, just acquired the naming rights for what used to be the American Airlines Arena. On the technology side, we all knew about pretty much Magic Leap, Spotify, but most and Cisco, but more recently, blockchain has announced the arrival to Miami, Live Nation, Newport, Reef. So all these will continue to happen, and we're having pretty much one or two news per week about companies relocating to Florida, which is amazing. And our mayor has done a tremendous job in trying to attract different type of companies, but especially they are targeting tech companies. The Florida has been always the world capital of the world. Prior to the pandemic, we were receiving $160 million, 16 million visitors per year. And because of the expansion of the airport in Miami, Fort Lauderdale, the hotel expansion, the cruise industry in Miami and Fort Lauderdale, and the arrival of Brightline, the future of Florida is very, very strong for the following reasons we're going to be discussing. But again, tourism for us is a leading indicator of potential buyers in the future. So that's for us to follow tourism patterns and where these people coming from, how the new routes that are being created. For instance, we have recently the new routes to Qatar, to Emirates, to Turkey, Kiev in Ukraine, Warsaw in Poland, and we're seeing all these new routes generate new potential feeder markets for the real estate, which is very important for us in the future. Hopefully, again, we expect Asia to having direct flights. Why people is coming here? We have one of the best retail shopping in the world. While in the United States, the retail is pretty much dying, and we're seeing that every single mall in South Florida has been having a huge capital expenditures in terms of to cope with the growth. We have total new destinations like what happened with the Design District. We're seeing Aventura Mall has done a fantastic expansion. We're starting the American Dream mall to start construction in 2022, but Harbor as well. So we feel that this is going to be a tremendous driver in combination with the expansion of the art and culture. Since 2002, Miami has attracted a more educated clientele into our shores with the Art Basel, with the Opera and Ballet in the Adrian Arts Center, the New World Symphony, Miami Beach in 2011, the Paris Art Museum, and the Science Museum 2013 and 14, respectively, the Bass Museum 2017. Miami World Resort will be a huge attraction moving forward, and the same thing with Skyrise. They're going to be our own version of our CN Tower or Eiffel Tower, or the Space Needle in the city that will be located near the Hard Rock Cafe in Bayside, just in front of downtown. So we believe that all this would generate at least 4 million visitors more to the city, which is a fantastic for our business. The other thing that was very important was expansion and the diversification of the food and beverage operation. In the past, we were very, very linked to subpar menus in comparison with some of the capitals of the world. During the major crisis in 2008 and 2010, 200 new restaurants were open in the Tri-County area, and we expect that to continue to be the case, improving the diversification, the quality of the offering that we can have in our cities. The other thing that we don't talk enough is the importance of our sport franchises in the city, in the Tri-County area. We have the Miami Heat, of course. On the basketball, we have the Marlins. On baseball, we have the Dolphins. We hosted the Super Bowl 2020, huge economy boost to the economy. We are be having two new attractions coming to Miami. That is the Formula One in 2022, and the new franchise for soccer that is being led by David Beckham. And we're all excited, especially some of us are from in my case, Argentina and France. I love soccer, so I'm dying to see it. But also we have the PGA Tour and the Tennis Open and the Miami Open that has been a huge attractions to the city. Alongside with the food and beverage and other in the boat show and other attraction that now our calendar of the event is so packed that there's no longer seasonality in the hotel industry. Pretty much is year round. We have things that are fueling our industry. The fourth component of the real estate appreciation is mortgage rates. And mortgage rates has been at its lowest pretty much in the last 2 years. And this will continue to be a big driver of people investing, and in a way supporting the price increases, because when you only need to put between 3 to 20% down, of course that the prices increases, they don't have such a strong impact in your initial investment. And that's how this can happen. Otherwise, without the fueling or the financial leverage, our expansion in terms of real estate prices will be curved downwards. This is a chart that is very interesting. I always analyze how the people made the first $1 million. And one time I read that in the United States, 85% of the first $1 million was produced in real estate. And so I start thinking, and the best way to depict this is with this chart, when in this case, we have an 80% loan to value. So we have 20% down in a condominium with 3% appreciation, an interest rate of 3.85. We're being conservative. And if you see this, the loan balance start decreasing over time. And then the price appreciation at 3% a year, that is lower than the real estate appreciation that we have shown in our initial chart, where the prices double pretty much each 10 years in the United States, and a little bit in Miami, in about 75% in the United States. So it's very significant. So you see that the blue is, since your loan come down and the prices go up, you're creating a tremendous amount of equity besides your initial deposit that was your down payment. For foreign nationals, that since they need to put a higher down payment, this equity creation is significant, but goes a lot slower, and the interest rate, of course, is higher. So even though it's a very important leverage that they can obtain, it is much more favorable for local buyers. The fifth point that we want to discuss is the land scarcity. When I moved to Miami in 2001, pretty much I was standing in the parking lot in 1300 Brickell, and I was looking around, and I could see the sky, and everything was pretty open. If you see the skyline of Miami, that now is the third best skyline in the city, we see that there's very few empty spots to build on the waterfront. And this is even more true for Miami Beach and even Bal Harbour and Surfside, where there's a very limited spots where we can develop. Same thing with Key Biscayne, the same thing with Coconut Grove. So as we reach a point where the land scarcity on oceanfront properties become more relevant, we're going to see that this gap that we're seeing with some important cities in the world, that we're putting Miami new development at $800 per square foot. Right now it's a little bit higher. And this is a combination of three main pricing components. Everything is on the urban corridor, to call it Brickell, Midtown, Biscayne. There is on the $650 per square foot. Everything that has a bay component is trading between $850 and $1,000, and everything that has like an ocean front, with the exception of Miami Beach, that is trading at over $2,000 per square foot in new construction, even close to $3,000. Let's call it that is $1,200, mostly Sunny Isles, etc. So let's call that the average in Miami, adjusted per volume, is about $800 per square foot. But if you compare this with New York, then new development is about $3,000. In London, it's $5,000 per square foot. Paris, $4,400. Hong Kong, $4,500. In Singapore, it's $1,500. We see that we still have a lot of catch up to do with some of these key cities in the world, and why they are so much expensive than we are. And the reality is because of the land scarcity. There's no place to build in Hong Kong. You have pretty much the canal, and you have the peak. Paris, there's very restricting zonings, and everything has been built inside the city. So you only have some potential refit opportunities. The same thing with London. In New York, we're seeing a lot of air right type of transactions. But the reality is that there's not a lot of infill locations than where we can build. Miami, the only exception where we're going to see most of the growth will be downtown Miami, where we still have a few bayfront lots, and the expansion in east of 95, especially east of South Miami Avenue. We feel that's going to be most of the supply coming to the market in terms of sizable projects. And the other way of seeing the same aspect is how much can I buy with $1 million. And we see that for Florida, you can buy almost 2,000 square feet, Miami 1,008, but in Hong Kong, you can only buy like 363 square feet, which means that you can literally buy like a small studio. And so that's pretty much is driving the international demand. The last point that is very important, especially for foreign national, is that the United States provides a very strong legal framework. There's a huge transparency in terms of the real estate transaction because everything is in public records. There's a very strong consumer protection laws in a way that the people that are investing with confidence. For instance, in new developments, we have the famous 15-day precision period that people can in a way cancel their transaction if they found something the condo docs or they feel that it's not the right fit for them. All the transactions in real estate in our market, of course, are US based, and that it's considered hard currency. So that's very important for some people from other geographies for them to come here and to have something that they feel that's going to be stable. We have a favorable taxation in Florida in comparison with other states in the country, and the United States has enjoyed a very stable political history. So all this is the famous process where the people, when there are problems in the home countries, they fly to quality. They go to a location that they feel safe. And that's what the United States is providing. And that's why we believe that real estate will continue to be main driving force for the US economy. In terms of the feeder markets, a lot has been happening in the last 5 years. And first of all, let's talk about the wealth map. This report produced by WealthX is one of our partners. We see that the North America has about 36% of all the individuals that have over $30 million in assets, in net worth, sorry. That it's Latin America that for us is so important. It only represents 2.8%. But the important thing that all these 2.8%, they have a huge disparity in income. And most of them, they have always dreamt about having a place in Florida or California if you're Mexican, etc. So we believe that 2.8 is very concentrated and it will continue to be an important driving force to us. Africa only accounts for 0.9% and has never been an important feeder market for Florida. Europe is the third most important region in terms of a wealth concentration. And we have seen that Southern Europe has always performed better than Northern Europe, with the exception of England, that has been a very key player in Central Florida, and Germany in the west coast of Florida. But most of the European countries like Spain, France, and Italy, they highly prefer Southeast Florida. The Middle East, for political reasons, especially during the Trump administration, has been extremely shy in acquiring properties in our market. Now we're seeing a little bit more interest, but still it's not a dominant player. And Asia is a very big question mark, with the second largest concentration of wealth. And when the gates open and when the direct flights arrive to Miami, we're going to see a huge change in the second home buyers and investors in our city. And that will generate a huge influx of capital that is going to be unprecedented. And we're going to push prices to levels we have never seen before. So this will happen. We don't know when it will happen, these direct flights. We have been talking about this for the last 3 years, and we're each time closer. The plane capabilities exist, and it's all about the negotiation of the routes, especially American Airlines. It's a predominantly player for the Miami airport, and in a way has been trying to drain the process. And we believe that perhaps the first direct flight will come even to the Fort Lauderdale airport, which is going to be amazing. Where these people live, where are the top 10 cities? United States country, sorry, the United States continue to be the leading location, followed by China, Japan, Germany, Canada, France, Hong Kong, United Kingdom, Switzerland, and India. India will become a very important player in the real estate in the United States. We're seeing changes in the appetite and also in the interest, especially in our internet platforms. So eventually there's a lag when the people start searching and start analyzing properties until they're the transaction materialize. So we expect that to happen. In terms of the United States, in the metro area, where New York continue to lead the pack, followed by Hong Kong, Tokyo, Los Angeles, Paris, London, Chicago, San Francisco, Washington, D.C., and Dallas. And when we put our, in a way, marketing strategies and where we're going to be tapping and when and so on, to understand this demographic is critical in order to, especially for the high-end portfolio that we are pretty much dominant. This year, our portfolio, we sold at $3.7 million is our average transaction. So to understand this demographic is critical. Then on a per age basis, we've seen that there's a younger demographic in the Middle East and Asia that are becoming important, while Africa and North America and Latin America continue to be a very concentrated in the older age group. In terms of the asset allocation, we still see that real estate is trading the lowest in terms of the overall wealth of these people, only for 6.1%. That makes sense. When you get to a certain point, how many places can you enjoy? So there is a point that the wealth concentration, depending on what industry you're on, is going to be there is a saturation point by owning real estate, unless you start investing in commercial real estate, that we believe it will take the place. And we feel that in the long term, real estate will continue to go up as the people are taking profit from the financial instruments and the cryptocurrencies, and even selling current real estate, and they're going to be reinvesting in other locations and other asset classes. So it wouldn't surprise to me that this number will move to 8% in the next 5 years. The other important factor for us is the vaccination program. We're seeing that in this, we have two colors. The dark color represent the first vaccination. The second one is how many people have the second vaccination. We've seen that Canada has done a great job with the first vaccination, but it's not doing such a good job with the second vaccination. So the reopening of Canada will take place pretty much in the next 30 to 60 days. We're seeing other countries where the second vaccination levels are very high, like for instance, Chile and United States. And that's great for this market, because we believe that the flow of passengers will start increasing fast. And we're seeing other countries that are super underperforming in terms of vaccinations, like Paraguay, Peru, Ecuador, Bolivia, Colombia. So we're going to see a reopening of the market, but it's going to be gradual, and it's not going to be all at the same time, and it will depend on the political relationship among the countries, especially the United States. For instance, the United States and Chile had a long-standing relationship, so we expect that to be one of the first one to reopen, and so on. But this is important for us because all these people that have been pretty much without being able to travel, and the same thing happened with people who have been in lockdown. Once the gates are open, we're going to see a huge improvement in the air traffic and the hotel in the occupancies in the hotels, and we're seeing that already. We're seeing that 5-star hotels pretty much all over the world has been having a huge occupancy rate, and ADRs being at record levels, because the people, they were just fed up of being in lockdown, and just trying to improve and enjoy their life. And it was the same thing that we discussed about the luxury goods components. The international buyers in Florida in 2020 were more limited because of everything we discussed, but still Canada remains at the top in top of volume, followed by Brazil, Venezuela, Argentina, and Colombia. And where these people are buying, Miami, Fort Lauderdale has concentrated about in 47%, South Florida about 47%, followed by Tampa, Orlando, Sarasota, and then Fort Myers area. So still South Florida continues to dominate the international markets, and the way that we program real estate new developments needs to fully understand these dynamics and what's happening in each one of these countries. The other thing that has impact and will impact a lot our in order to attract international buyers, it is the appreciation of certain currencies. For instance, Canada and Russia, and that there are countries that are mostly exporting commodities, we're seeing that the local currency appreciated significantly, and Canada is crucial for us. And I believe that that will help us tremendously as soon as they reopen the frontiers. The Chinese yuan and the Hong Kong dollar are pretty much stable, nothing to talk about. And Euro and Japan, they are trapped in a huge liquidity, in a way what we call liquidity traps, where even if they have a huge easy monetary expansion and very low interest rates, the economy is having issues to recover, and the impact of the pandemic will be more long lasting than the United States, for the very clear reason United States took a very strong stance in terms of with the economic relief package, that in a way they injected so much money and so much fiscal stimulus to the economy, that in a way that's why we're seeing a huge recovery in the United States. And we believe that that, of course, will have inflation concerns moving forward. What happened in Latin America is a little bit different. We've seen Argentina and Peru that they are in the devaluation spiral that is out of control, and the people are trying to exit their countries, especially because of the left political trends that are taking place. While we're seeing Brazil and Mexico and Chile and Colombia, they are more exporting markets with a little bit more stable political scenario, with the exception of Mexico, that has improved somehow in their stance, and the latest elections in a way will put a stop into the potential migration to the left. And we feel so, from our point of view, we're going to be seeing people coming from Argentina and Peru because they want to exit the country. It's going to be people that are trying to relocate, and we're going to see a combination of relocations and investment coming from Brazil, Mexico, Colombia, and Chile. The international landscape is a little bit like a mess. All over the world, we're seeing different scenarios. We're seeing a social unrest in Colombia and Chile. We're seeing, in a way, war tensions in Israel. We're seeing it in Spain. They have a huge aftermath effect after COVID, the Brexit in the United Kingdom. Brazil is trying to figure out a way to get out of the COVID scenario as well. Venezuela will continue to be pretty much in the same scenario. We don't expect much to change there. And here's pretty much like an overview of each one of economies in Latin America. I don't want to go too much into detail, but we're going to be sharing the presentation in the future. But we believe that Colombia will be a very important feeder market for us. There are concerns about the upcoming elections. Venezuela, we don't believe that nothing will change much. The elections in Brazil are going to be next year. We think that has been one of the biggest decline, but the recovery has going to be strong. Chile, moving to the left. Peru, after the elections of last weekend, is a huge concern about what's going to take place in the country, and we expect huge capital outflows. The same thing with Argentina, because the people are trying to get out of their money from the country because of the low expectations in terms of economic recovery. Mexico, for the last elections that I mentioned, put a stop into the expansion of the left party. Tensions in Guatemala in terms of corruption and security. Europe has their own problems, and but we believe that we'll start stabilizing, but we expect more inflow of buyers from Europe in the future. And something that will shift the capital outflow, the where the people have been buying, is that local governments are imposing taxes to foreign buyers, like a stamp duty taxes, in order to curb down the foreign investment. Because what's happening in certain countries is that there have been so much buyers coming from abroad that the local buyers are being outbid, and they have no chance to buy their properties. So that's why what they're trying to do is just to artificially increase the real estate prices by imposing taxes when you acquire the properties. And this is very obvious in Canada, in Vancouver, Toronto, the taxes are super high, and the UK and Spain, and even Hong Kong and Sydney. But if we analyze this chart, and I feel that is the most important takeaway from this chart, is that all these destinations where the taxes are being increasing significantly is the fact that is where all the Chinese buyers or Asian buyers are buying. And there's no way to curb down such a massive economy and that large number of buyers. And that's why even in Australia, they are forbidding now to give loans to Chinese nationals. But if we analyze all this, we see that in the United States, the entry or the transactional cost remains so low that, especially in Miami, that we believe that once this the direct flights to Asia will come, we're going to be having a huge awakening, because not only we're cheaper on a dollar per dollar basis, but we're also more affordable because the entry barriers from the taxation point of view are much lower. And this is pretty much the map of Latin America. The more the countries are moving to the left, that is the red component, we're seeing more capital outflow and more people trying to get the money out of their country. Where they're blue, is more like countries that are trying to remain center or center right. And we feel that this will continue to change in the region. And unfortunately, there's not a lot of improvement expected after COVID, because the people that were in having huge hardships, they will, of course, will be demanding more from the governments. And unfortunately, after 4 or 5 years of very low, in a way, commodity prices, and the governments are not at its peak in terms of reserves or capability to expand the fiscal stimulus package in these countries. So again, the region has been very affected with COVID. The health crisis has hampered the economic growth. We do expect the economy to recover in 2021, but the disparity in terms of income will gap, and this gap will continue to fuel political tensions and the polarization of the population. So this is going to be something important to continue to monitor closely. With this, we finish our presentation today. I hope you guys enjoyed. Thank you so much for participating, and we expect you to continue following us in all our digital platforms. And I would like to open a Q&A session, and pretty much on time. So we promised an hour, it was an hour. So we're open for questions. Thank you so much to everyone.